Income Tax 2020. Schedule C, Business Use of Your Home. Come in, relax with Income Tax 2020. Schedule C, Business Use of Your Home. When thinking about the income tax equation and the Schedule C or sole proprietorship, we're thinking about the top line item, the income line item, remembering that we do have a separate schedule, that being the Schedule C, having both income and expenses on it. In essence, the bottom line being net income, which then rolls into the top line of our income tax formula, where we then apply the adjustments or above the line deductions, and then the standard or itemized deductions, the below the line deductions, to get to the taxable income. We know that the Schedule C has many different impacts on the tax return, including on the face of the 1040, having an effect the net income in essence, or the bottom line of the Schedule C, rolling in to the Schedule 1, which then rolls into line 8 here. Half of the self-employment tax typically being deductible for the above-the-line deduction to get us to the adjusted gross income. Standard deductions, not unique to the Schedule C type of business, but applicable to everyone. And then the qualified business income deduction here could be applicable. That will not be our focus right now, to get down to the taxable income, which would be the $64,428 here. Here's an example of the Schedule C. So we have the income and the expenses. We're going to be focusing here on the business use of the home, which will basically be below this item. It'll have another schedule that will pull in below this item here. We'll take a look at it on the forms in more detail in a future presentation when we work with this in the tax software and with the forms. Now, just from a practical standpoint, when you're thinking about the business use of the home, you're applying it typically to some kind of business income, the most common being, of course, the Schedule C here. So if someone is asking you about their home office and they're a W-2 employee, very unlikely they'll be able to get any benefit from the home office in that situation. But if they have a Schedule C, then they might be able to get some benefit from the home office. So if you have a home office and you're working with someone that is has a Schedule C business, then you're going to want to ask them about whether or not, or where they do their principal business or work, to see whether or not the home office could be applicable. Now, although the 2020 information is out for the Schedule C, a lot of the instructions are not out at this point, including the instructions for Form 8829. So we're going to be basing our information on the 2019 information, then making adjustments for it where applicable or where we think it's relevant. But just realize that the information primarily is coming from the 2019 and then possibly adjustments to it. So you can look up this information on the IRS website. The 2020 information should be out shortly at irs.gov, irs.gov. Some of the resources could be the instructions for Form 8829. We have the business use of your home. This is publication 587. And then the tax guide for small businesses are some things you can look up on the IRS website for more detail. This topic is fairly large, so we're going to go over it kind of in summary here. But there's some things that we may not to get into a lot of detail in, such as daycare service and whatnot, which are kind of specialized areas. But we'll give a good overview, and then you can dive into it deeper if you have more questions that are specific questions about it. To qualify to deduct expenses for business use of your home, you must use part of your home exclusively and regularly as your principal place of business. See principal place of business later, so we'll talk about that in more detail, but that's going to be the key terms. So you want to use some of your home to write off basically as part of an expense, basically on the Schedule C, to write off against business income. Then typically you're going to need it to be exclusively and regularly as your principal place of business. So those are the key terms: exclusively, regularly, and then this principal place of business. We'll probably be drilling down on some of those terms shortly. Exclusively and regularly as a place where you meet or deal with patients, clients, or customers in the normal course of your trade or business. In the case of a separate structure which is not attached to your home in connection with your trade or business, so we could have a separate structure like a garage or some other structure on the place where our home is on the property, on a regular basis for certain storage use. So we could have a situation where we have storage use for it, so it's not our principal place of business in that case, but we have storage use, so that would be kind of a separate or more specialized type of area. So we see storage of inventory or product samples later, so we may not go into that in as much detail, but we're going to kind of touch in on that. So if you're talking about inventory rather than basically your office or where you're basically meeting clients, then you might want to go in and just research more detail in on that. For rental use, for that you could see publication 527, or as a daycare facility, see daycare facility later. Daycare is going to be another kind of specialty area because normally when it's a principal place of business or some place where you're meeting clients and whatnot, there's that exclusivity principle here. But with the daycare service, since you're probably having the daycare service in like the main part of your home, there's kind of an exception typically for daycare. So once again, daycare is kind of a specialty type of area. So if you're looking into a daycare system or a client or having a daycare and seeing whether or not you can write it off, you want to get into more details that will be specific to daycare. Exclusive use. So what is exclusive use? We're getting into some of these terminologies now. To qualify under the exclusive use test, you must use a specific area of your home only for your trade or business. So that's what it means to be exclusive. Now again, notice we had some exceptions, like with the daycare, possibly you could have an exception or something like that. But in general, when we're talking about like the home office, we're thinking exclusivity as the idea here. So the area used for business can be a room or other separate identifiable space. So notice it has to be a separate identifiable space. So if your home is very open and you have like a lot of open space in it, you need to basically carve out that piece of space within the home that you're going to say this is going to be specifically used as, business usage, possibly say an office. The space does not need to be marked off by a permanent partition. So it doesn't need to be a whole separate room. You don't need an actual wall physically in the home, but you need to be able to identify that this part of the room is for business use. You do not meet the requirements of the exclusive use test if you use the area in question both for business and personal purposes. So if you're just basically working like in your living room and you're putting the stuff on your coffee table, in the evening or in the middle of the day and in the evening, you're putting your feet on the table as you watch the Netflix and whatnot or something, then that wouldn't be the exclusive use because obviously you're using it for both business and personal. But if you carved out and put possibly you're saying, this corner of the room here and possibly even put some kind of, the cubicles up on it or something like that. And you're saying, this is my office space right here. I'm declaring this my office space and doing exclusivity work in that space. That's the kind of thing that the IRS is going for or looking towards. So exceptions to the exclusive use. So now we're going to say, okay, we just said we have to have it exclusively used. Are there any exceptions? Well, we have some exceptions. You do not have to meet the exclusive use test if either of the following applies. You use part of your home in question for the storage of inventory or product samples discussed next. So if you're thinking about inventory, you're storing inventory, then you might, you have different rules basically with relation to the storage of inventory. So again, we might not go into that in a whole lot of detail here. If that's a specialty kind of area, look into some of those publications and resources we looked at and you can drill down on that. We're thinking mainly home office in this here. You use part of your home in question as a daycare facility, discussed later under daycare facility. So again, daycare, because of the fact, obviously, you're probably opening up your entire home, or at least, the largest part, like your main central area of your home, which is going to be used for private use too. The kids are going to possibly in the kitchen and whatnot and everything. And so that means, that they're going to have an exception. And so if you have that exception for daycare, rather than just a home office that you're carving out like a home office type of thing, then you want to get into more detail and it's a little bit different, a little bit of a specialty area there. So to qualify so this is going to be the regular use now. So now we're looking into regular use. What does that mean? To qualify under the regular use test, you must use a specific area of your home for business on a regular basis. So it's got to be something that, I use it somewhat consistently for the business, for the generation of revenue. Incidental or occasional business use is not regular use. You must consider all facts and circumstances in determining whether your use is on a regular basis. So you got to have regular use, you're using it regularly. Trade or business use. To qualify under the trade or business use test, you must use your home in connection with a trade or business. If you use your home for a profit-seeking activity that is not a trade or business, you cannot take a deduction for its business use. So for example, an activity that you're doing just in order to seek profit that is not a trade or business will not typically be qualified. For example, if you were doing something for your investments and you're tracking your investments and whatnot, but you're not actually a broker, you're just doing it for your personal investments, you might have a profit motive there, but it would not then be typically a trade or business in that circumstance. So principal place of business. So what is going to be the principal place of business? You can have more than one business location, including your home, for a single trade or business. To qualify to deduct the expenses for the business use of your home under the principal place of business test, your home must be your principal place of business for that trade or business. So this key term here is going to be coming into play if we're deducting with relation to the principal place of business. Is it our principal place of business? To determine whether your home is your principal place of business, you must consider the relative importance of the activities performed at each place where you conduct business, and the amount of time spent at each place where you conduct business. So you're thinking about, if you have the home office, then where's most of my business being done in terms of time allocation, and then where are going to be the most important components of the business work that is being done. Now, oftentimes, if you have the home office and you have a home business, you might be doing a lot of time elsewhere, but you might be doing some of the admin type of work, which is kind of like the managerial type of work, whatnot, basically in the home office. So that then might qualify, even though you have time being spent elsewhere, as basically the most important kind of thing where you're doing all the planning and whatnot in the home office. Your home office will qualify as your principal place of business if you meet the following requirements. You use it exclusively and regularly for administrative or management activities of a trade or business, and you have no other fixed location where you conduct substantial administrative or management activities of your trade or business. So you might be in a situation where you do a lot of the work outside of the office. For example, you're traveling, you're doing sales or something like that. Your time might be in some other place more than the office, basically out doing whatever it is that you do. But if you're doing your principal management type of activities within the office, then you still may be able to qualify for the principal place of business as the home. Now let's think of a flowchart type of method to see whether or not someone would qualify, and this might be a good tool to use if you have some questions about whether or not someone does qualify, or if someone has questions for themselves. Is part of your home used in connection with a trade or business? If no, then basically no deduction. If yes, then we move on to the next area. Are you using the part of your home as an employee? If you're saying yes, meaning you're an employee and you're not a sole proprietorship, then basically no deduction right there, because it applies to the sole proprietorship typically is what we need. If no, meaning it's not for W-2 wages, but possibly for something else such as a Schedule C or sole proprietorship, then we move on and see if we can take the business use of the home deduction. Is the use regular and exclusive? If it's not, we don't use it regularly and exclusively, no deduction. If it is, then we're going to say, is it your principal place of business? If we're going to say, yes, it's your principal place of business, then we can basically say, okay, now the deduction is going to be allowed. However, if the answer is no, it's not your principal place of business, then we got to say, okay, is there some kind of exception that's being met here? Do you meet the patients, clients, or customers in your home? So now we're thinking, is this basically a meeting place type of area rather than kind of your management office type of area? So do you meet patients, clients, or customers in your home? If yes, then we're going to say the deduction could be allowed. If no, it is a separate, is it a separate structure? If it's not a separate structure, then we'd say no deduction. If it is, then we're going to say the deduction could be allowed in that case. So then we're going to think about the methods we could use. We have a simplified method and then the actual method. So we'll talk the actual method. It's obviously more complicated. We'll talk about the actual method, and then we'll go over the simplified method. Obviously, in practice, you might be in situations where you want to test one or the other, at least in certain circumstances, to see which would be larger. So if we're saying you have a business deduction, then how do we do that? How do we deduct the business office? What kind of things can we deduct? So that's what we'll take a look at here. So if you do not or cannot elect to use the simplified method for a home, you will figure your deduction for that home using your actual expenses. You also will need to figure the percentage of your home used for business and the limit on the deduction. So we're going to have to do some kind of percentage allocation. We're going to figure out the actual costs. We're going to apply out what would be percentage-wise versus the direct costs and so on in that method. Or we can use the simplified method, which would be simpler, but we're going to have to consider whether or not the expense would be as great to use the simplified method. So if you are a partner or you use your home in your farming business and you file Schedule F, Form 1040 or 1040 SR, you can use the worksheet to figure the deduction for business use of your home near the end of this publication. So you can go to the publication if you're in that situation, filing basically a Schedule F. Then you can take a look and look that up in the publication. If you use your home in a trade or business and you file Schedule C, Form 1040 or 1040 SR, you will use Form 8829 to figure the deduction. So we'll take a look at the Form 8829 in a future presentation, but obviously the instructions for Form 8829 could be a useful tool to look into if you have questions about it and want to do further research on it. So part year use, you cannot deduct expenses for the business use of your home incurred during any part of the year you did not use your home for business purposes. So if you have a partial year, like you started the business in the middle of the year, then you can't deduct the business use of the home expenses for the part of the year before that. So you're going to have to do some ratio of the year calculation to make sure that you're only deducting the part of the year that it was actually used. For example, if you began using part of the home for business on July 1st and you meet all the tests from that date until the end of the year, consider only your expenses for the last half of the year, figuring your allowable deductions. So actual expenses, you must divide the expenses of operating your home between personal and business use. So now we have, the problem here, of course, is now we have a home, but we carved out part of the home for the business. And so now the expenses related to the home, we got to then kind of fractionize them to the personal and business to see whether or not we can take the deduction on, say, basically the Schedule C, if we have a Schedule C business, and the personal side, then we typically cannot deduct unless there's an exception like interest and whatnot for the home mortgage and things like that. So the part of the home operating expense you can use to figure your deduction depends on both the following: whether the expense is direct, indirect, or unrelated, the percentage of your home used for business. So if we're thinking about the home office, this is, if you break it down, it's pretty straightforward, but it's a lot to take in. You could say, well, if it's a home office and I painted the actual home office, well, then I painted my office in the home. That's like a direct expense. However, if I painted like the whole house or something like that, or the outside of the house or something, then you would think that that might still indirectly affect basically the home office. So it would be then indirect then. I'd have to use some ratio. If it was direct, I could just expense the whole thing. If it's indirect, I have to use some kind of ratio. If it's not related to my office, meaning I painted the living room, which is not my home office, then you would think I wouldn't be able to allocate any of that to the home office because it has nothing to do with the home office. So then the percentage of your home used for business, we'll have to think about a ratio of the home. The most common method is to take the ratio, like the square footage of the room or the little thing that you carved out, measure out the square footage, and compare that to the square footage of the home, a ratio, square footage of the business use divided by the square footage of the home to get the ratio. And then you use that ratio, let's say it's like 15%, then you use 15% to basically kind of break out the indirect expenses. The direct expenses all get deducted. Indirect expenses you break out using the ratio. Basically, unrelated expenses, you don't get those because, those might be on the personal. So types of expenses, we have the direct, we have the indirect, we have the unrelated. So the direct expenses only for the business part of your home, so deduct in full. Example, painting or repairs only in the area used for the business. So you painted your office. That means you get to take the whole deduction because that's for the office. Indirect, expenses for keeping up and running your home, deduct based on the percentage of your home use for the business. So that's like insurance, utilities, general repairs. We have to apply that out with the percentage. And then unrelated, expenses only for the parts of your home not used. So those aren't deductible, like lawn care, painting a room not used for business. So certain expenses are deductible to the extent they would have been deductible as an itemized deduction on Schedule A, or if claiming standard deduction would have increased your standard deduction had you not used your home for business. So we got some of those kind of itemized deductions that may have had an impact basically on the Schedule A and may then be applied out. So, and some of those, like interest on the home mortgage and whatnot. If the expense is indirect, use the business percent of these expenses to figure how much to include in your total business use of the home deduction. So if it's indirect, the business percentage is going to be used. If you are itemizing your deductions on Schedule A, Form 1040 or 1040 SR, these expenses include the following. So we could have real estate taxes, right? Real estate taxes are things that could have been on the Schedule A, but we might have to allocate them out, because if we have the home office, some of the real estate taxes would have been deductible on Schedule A under real estate taxes, but it seems like some of them should be deductible for the home office too, now that part of the home office is for an office. Then we have the home mortgage interest. So obviously the home mortgage interest might be deductible on the Schedule A, and that's going to be something that if you use part of the home for business, you would think that you get home mortgage for the business use of the home. Mortgage insurance premiums, casualty losses attributable to federally declared disaster areas. So depreciating your home. So this is the other one that we have. Normally we don't depreciate the home basically for personal use, because we're not allocating the depreciation to any item to lower the income because it's personal use there. But if we now have a business portion of it, you would think that we would be able to apply out some of the decline or depreciation to basically the business usage. Now this complicates things as well, because it also complicates if you sell the home, you now depreciated part of it, and it kind of could have an impact on the basis and whatnot, and your gain on the home sale and whatnot. So be aware of that. The depreciation can kind of complicate things. If you own your home and qualify to deduct expenses for its business use, you can claim a deduction for the depreciation. Depreciation is an allowance for the wear and tear on the part of your home used for business. You cannot depreciate the cost or value of the land. So land isn't depreciated. Buildings are, because they wear down over time. You recover its cost when you sell or otherwise dispose of the property. So again, now that we have depreciation, just like we would with depreciable property, now when you sell the home, even though it's a personal home, you're still going to have capital gain that could result in that. And the fact that you have now depreciated, taken some of the deduction or cost as an expense, means that your cost or basis in the home will basically possibly go down due to that. So when you sell the home, you could end up with a higher gain, which could result in taxes at that point in time. Although when you sell the home, there's typically a big exemption. So most people are okay unless you got a big gain. In any case, before you figure your depreciation deduction, you need to know the following information: the month and year you started using your home for business, the adjusted basis and fair market value of your home, excluding land, at the time you began using it for business. So obviously when we put the home on the books for depreciation, it's a kind of a problem due to the fact that we didn't just buy the home, right? We've had it at personal use for a long time. What do we put the home on the books for? Because what's going to be the cost of the home that we put it on the books for? Because we need that cost in order to then depreciate, going forward from that point. So the adjusted basis and fair market value of your home, excluding land, at the time you began using it for business, the cost of any improvements before and after you began using the property for business. So improvements could increase, the basis of the home. So you want to, make sure you have that included so you can get the depreciation that you need. Or the more depreciation, typically the better. So the percentage of your home used for business. So you can see the percentage later. So using the simplified method. Now notice also, just with the depreciation, if you're renting the home, then a lot of these items here, like if you're renting a place, you might not have the real estate taxes and the home mortgage interest, these things that are kind of the problems or kind of the confusing things, and you're not going to have this depreciation of the home. What you will have is rent, right? You'll have rent on the place that you're renting, and that's easier to allocate. You wouldn't be allocating it to Schedule A. If you're a renter, you don't get any benefit from the Schedule A. You don't get any other deduction. So that means that a portion of the rent that's going to the home or to the home office, that you can allocate it over, and you don't have any of this kind of issue with depreciating the home and allocating, removing the cost basis of the home. You allocate part of the rent just like you would with any other kind of expenses, such as utilities and whatnot that would be on the home that you can now apply partially to the office. Okay, let's take a look at the simplified method. Now we can use the simple method, which is a lot simpler. So the simplified method is an alternative, but obviously because it's simpler doesn't mean you want to use it per se, because you're looking for the biggest deduction. So the question would be, is it going to give you a bigger deduction, and is the time of the more complicated method worthwhile, or is it just easier to just do the simplified method and leave it at that? So using the simplified method. The simplified method is an alternative to the calculation, allocation, and substantiation of actual expenses. In most cases, you will figure your deduction by multiplying $5, the prescribed rate, by the area of your home used for qualified business. So in this case, basically all you got to do is figure out the area of your home that's for qualified business, right? And then you're in essence gonna get the $5. Now this $5 rate, they could change, from year to year. So be aware that standard rate, could change from year to year. The area you use to figure your deduction is limited to 300 square feet. So if you have a place that you're using that's greater than 300 square feet, then you may not want to use the simplified method, because now it's gonna cap you at this 300 square feet. See simplified amount later for information about figuring the amount of the deduction. For more information about the simplified method, you could see revenue procedure 2013-13. So we'll take a look at some of these in example software next time, and just kind of do a compare and contrast of the simplified method and the direct method, and kind of a basic example. Again, if you get into some of these details, such as depreciation in the house, we may not get into the depreciation of the house and whatnot. Or if you have a daycare or inventory that you're storing as opposed to basically a home office that's for business, then you might want to drill down and do a little bit more research to make sure that you're maximizing your deduction for it.